profit results this week revealed Australia's airlines are flying in troubled skies. Virgin Australia posted an $83 million first-half loss. Qantas delivered a $235 million shortfall and plans to axe 5,000 jobs. The Flying Kangaroo's struggling strategy puts the future of the airline and its CEO in the spotlight. Investor Mark Carnegie pushed for a breakup of Qantas 2 years ago, and now he believes there's a clear lifeline, using the Future Fund to underwrite the airline's debt.
This performance by our airlines is unacceptable, and the current position is unsustainable.
These airlines that do the best by their customers and manage their businesses effectively will prosper, and obviously the ones that do not will fail.
We want to hold this company to account to ensure that we can save as many jobs as possible.
As an industry, Australian Airlines are bleeding. Red, the dominant colour on the balance sheet.
I think Qantas has got some great assets, and I think there were different ways to do things in the past. But right at the moment, I don't think anybody would want to be sitting where Qantas are.
But amid the massive losses and significant job cuts, there has been a pressing debate. Will the turnaround strategy for Qantas be enough? The government appears to be hardening its opposition to a debt guarantee for the airline, something that appeared assured. Others say the debate isn't over, believing there's a smarter way to get a deal done if Future Fund Chairman Peter Costello prices the debt deal.
It's got a balance sheet that's strong enough to be able to provide it. It needs to do it at a profit. And he's a person that everybody agrees will cut a fair deal.
Mark Carnegie says the Future Fund would be better placed to offer a lifeline in a better model than the government's bank guarantees during the GFC.
And I never felt that the rate that the Australian banking system was charged for that guarantee was anything near fair.
For Qantas, the past few years have been nothing short of turbulent. After a failed $11 billion takeover bid for the airline, its share price was around $5.45. It traded steadily at $6 until the GFC hit. Alan Joyce took the helm with the skies between Australia and the US already open, and the fall continued. Grounding his fleet in 2011 didn't help either. Now Mr Joyce leads an airline in crisis, battered by a battle to put seats in the skies.
Qantas is entitled to, we believe, to question the motives of apparently loss-leading strategy by a domestic competitor funded by three of our largest international competitors, each backed by their home governments.
Announcing his own loss, Virgin boss John Borghetti disputes Joyce's numbers but admits the capacity battle is hurting the bottom line.
Are you blaming Qantas for the capacity war?
Well, I suppose I'm not blaming anybody other than to say there is an oversupply of seats. There is a competitor that is hell-bent on putting two planes on every plane that we put in. You draw your own conclusions.
So if this capacity war is driving down profits, why keep doing it?
That's a very good question.
So?
Well, you have to have a look at our capacity growth, and our capacity growth has been modest by any measure in terms of comparison, in terms of what the other person has done.
John Borghetti accuses Qantas of pursuing market share at the cost of profitability. For now, Alan Joyce is withstanding questions about his position, a position that retains the tentative public backing of his chairman.
And joining us this morning, Chief Executive of DP World Australia, Paul Scurrah, and AFR Chanticleer columnist Mike Smith. Good morning to you both.
Good morning, Deb.
Now, Cabinet is set to discuss the issue of Qantas when it meets in Canberra tomorrow. If the Prime Minister is increasingly reluctant to underwrite the airline's debt, and the Transport Minister, it appears, as well, is the Future Fund an option, Mike?
Well, that's right. It's a really interesting idea. It looks like there's growing government opposition to the idea of a debt guarantee. So Mark Carnegie's idea is interesting. I don't know if it will fly. There would probably be a lot of opposition towards the Future Fund underwriting Qantas at this time. But it's interesting to note as well that Mark Carnegie, he was one of a group of investors that bought shares in the airline last year, and he's very opposed to Alan Joyce's
strategy. So a slight vested interest, you think?
That's right, yeah. But it is an interesting idea.
Yeah, and it runs a bit counter to, Paul, doesn't it, to what the Future Fund was set up to do?
I think so, and I think what's unhelpful for an airline is speculation about shareholding and their future. So the important thing for Qantas now is to get the momentum back and the focus back on their customers and what they do best.
Now, the unions are threatening industrial action, so that could derail things for them, saying that Qantas management don't have a clear plan. There are a lot of questions still to be answered in this as well. We've seen the Qantas announcement, but they didn't talk at all about the frequent flyer program, which really does seem to be the one thing working for them.
It's a bit of a jewel in the crown for Qantas right now, and I'd be really surprised if they do anything negative with regard to the customer offering. When you're cutting costs like this, one of the things you have to avoid is any customer impact. And with the fiercely competitive environment that the airline industry is in at the moment, Qantas can ill afford to disenfranchise their customer base. So I'd be really surprised if there's any changing of the offering, particularly when also it's a strong part of the valuation of Qantas. So I'm not sure they'd want to diminish that.
And if the battle over market share, Mike, is damaging both airlines, Virgin and Qantas, so badly, why don't we see them back off? They could learn a thing or two, couldn't they, from Coles and Woolies? Well,
that's right. I was speaking to a senior aviation executive, former executive this week, who said they're both mad. The market's big enough for both of them to make quite a good profit. So it was interesting that John Borghetti didn't quite answer that question in the shot then. But, I mean, Borghetti's got a very aggressive strategy and he has taken some market share off Qantas and, you know, he's investing a lot of money in new product and services. So he could come out of this the winner in the end, but it's whether Qantas backs down or not.
Yeah, a lot more to play out on this one.